Deal or no deal, it could apply to both the US and the UK at the moment with Brexit, and in the US, of course, it's about the stimulus bill that they want to print another few trillion, but they're not able to at the moment until the US election is sorted, unless, of course, they agree to the deal where it was was it 600 billion or something? I don't know, half a trillion. Anyway, let's have a look at yesterday. The market's still fairly quiet for yesterday. You can see the futures market where activity picks up down at the S1. The market's already short below the 200 and the DP level there. So let's fast forward through, see what happens at the start. So the market moved to the upside, headed towards the DP. Then it gapped up. You can see there's a small gap there. And you will see as I move forward, once the bar completes, the selling coming into the market. At the 200 MA, prices managed to hold. They closed back above this initially. This is an orange bar. This is what is known as a gapped up on the open bar. And gapped up on the open bars, if prices gap higher, they tend to sell off. It's a way of drawing people into the market. You gap prices, everybody thinks it's going up, and then you sell into this. And again, it was something that was more relevant to the pit trading days when the markets had set times. There was no overnight markets. It was something that I spotted way back in the early 90s. But it appeared twice yesterday in this chart. We see them, the market trying to get back with some buying, trying to head towards that DP level. Just having a look at the daily chart and redrawing the fibs, which I'd managed to delete. So once I'd done that, it was a matter of, again, waiting to see what happened. And again, you've got another gap up on the open bar. You see prices gapped higher than the previous bars open, and the volume very high as well. And then prices going south. On this occasion, they continued to the south side, as you'll see there. Selling coming back down to the BRN and through the DP. Massive increase in selling here as prices drove down to the 200 MA there. So let's fast forward through to talk about every bar here. You can see prices then selling as they went through. The volume now is the highest bar, or equal to the bar that we saw the previous selling here, having to drive through the 200 MA, and that high selling had to come through the DP level. So again, these areas you should see an increase in selling and buying if prices are to move either higher or lower. So the trade was filled. Prices then moved to the entry price and then continued through to the scalp and then down to the low, which is a really important level in the market, especially in the bull market. I know I keep mentioning this, but it is very important because it breaks the higher lows that you have in the daily chart if you can't get the market back above this area. So here you see an increase in volume, and then you see the testing, and it's time to exit the trade. Nice 38 points there. If they're testing at the low, then it's likely you're going to get some profit taking. Doesn't mean to say it won't go lower, because it did yesterday, but at this area is sort of the optimum for taking some profits off the table. I never apologize for taking a profit. So here you can see that we've got another test of prices with the green there. I drew in the fibs because I'm trying to gauge these sort of areas here, see where the 200 ties in, and it's in with the 78% retracement. Just something else that I'm working on at the moment to generate more signals, and also in areas where it offers a better risk reward. So then prices struggled at the low, and they moved down to the the S2 in the intraday, just moved back, and then into the daily chart we're at the 62% retracement, and this was the low for the day. And again, you can see that spike in volume as prices come off the low of the bar, close off the low, and then I'll just fast forward all the way through, because you'll see prices trading to the upside, and then we had a potential buy signal. And again, I'm going to fast forward through this because prices traded sideways for a while. So let's just go through this. So we had some potential weakness. The market traded back down to the 20 bar moving average, where prices were picked up at this level obviously a bargain, and then prices headed up towards the scalp. So let's move on. Move the stop to break even, and then we've got the S1 where prices then see an increase in volume to drive through this area, and then of course we've got the 200 MA, which we know was a 78% retracement as well. So at this level we now see the potential weakness coming into the market, just as we saw the potential strength in the down move there. Again, it's a key indicator that prices are likely to be over for the time being. We're watching the 5-bar moving average and out of this trade for another 20 odd points. And of course the market held at the 5-bar moving average, came back to the 200 MA, and then more potential weakness, and the market just traded in a sideways range then through to 10 a.m. In the afternoon, the market didn't do anything at all. It just stayed in a sideways range. It moved down to the 200 MA. You can see the buying pressure coming in as you've got some sort of support here, because you can see prices came off the low, closed back above the 200 MA with an increase in volume as well, followed by even more buying here in this bar. So this has brought the market back. You've got a 78% retracement there. Prices moved down, stuck at the 200 MA there as prices then reversed and came back, didn't fill the buy signal, hit immediately with some selling because you've got selling over to the left, and then of course the market coming back off the 20-bar moving average there. And yeah, just stuck in a range. So I'm going to fast forward through here to the 4 p.m. cut-off period there. So again, that was Monday afternoon, just stuck in a very, very tight and quiet range. Okay, let's have a look overnight. Start off with the daily chart. Again, you can see that we're stuck in this sideways range. It's because we don't have any news, but the market is managing to move back to the upside at the moment. Also yesterday, prices came off the 20-bar moving average at the 62% retracement in the daily chart. Need to close back above the 5-bar moving average, and then we have these resistance levels on the upside if prices do move back to the upside there. Meanwhile, overnight, prices open, traded down to the DP level, which we can see here, traded sideways, huge volume in this test bar, and then the bar following as well, as prices then moved to the upside. The battle won by the bulls, and then prices have traded back up to the 200 MA. They found this as support. We can see that prices are at the 200 MA there at the moment. There is no news today, as we just have a look at other news here. We've got the implied volatility sneaking up a bit to 2013 from 19.2.8, so that's because the market finished down last night. And also you can see we're still green at the moment. There's still potential to move to the upside. No news today, absolutely nothing. So again, as I said yesterday, we don't get any news until Thursday, when we get the bulk of the news this week. So tomorrow, no news either. So it's a quiet week. The market's got to make its own direction. Quick look at the Dow. This also stuck in a sideways range as well at the moment, but managing to close above the psychological 30,000 points at the moment. Okay, that will do it for this one. If there is anything else to report, I will let you know, but I would expect not too dissimilar from yesterday, unless of course there is some Brexit news which could move the market sharply, and any other vaccination news as well. Don't forget, today is the first day that people get jabbed, so we'll see. You never know. You wouldn't think that people getting jabbed would be bullish for the market, but apparently it is. So there you go. Okay, that's it for today. If there is anything else, like I said, I will let you know. But as ever, thanks for watching. See you in the next one.